retail story is a 4 to 5 year story. So it's not something that we entered today. And within those 4 to 5 years, we've taken the lessons there are. We built the system, we built the infrastructure, we built the technology, we've trained people, we continue to retrain. We've hired people from outside the country who have experience in retail banking. So these are some of the things we've done that anybody that is entering today will need to go through that learning curve. Maybe not as long and as windy or difficult as it had been for us, but there are things that you must put in place for you to play in that segment. And it's an interesting segment of the market though, but you need to be prepared for it. And most importantly, you need to approach it with a different mindset. So if you were playing in the commercial segment of the market or corporate segment of the market, and you think because Diamond Bank is in the retail segment and is making waves in the segment, and you think you jump in without changing your mindset, you'll probably not make a great success out of it. So we have no fears that we will continue to be the leader in this segment of the market. If anything, we have retooled, we've refreshed some of the things we were doing, we've transformed, we've brought in new people, we've trained them extensively, and we continue to train them. So I'm very certain that we'll continue to show leadership. But I think it's an interesting sector, and I will encourage anyone who wants to jump in to please do.
Recently, it was announced that Diamond Bank is interested in acquiring a European banking subsidiary in order to capture overseas business that is currently being lost to corresponding banks. Can you tell us a bit more about the type of banking service that you would be conducting through your European-based subsidiary?
Well, it's going on well, and like I had said at the conference call, we are not acquiring a high street bank. It's a niche player, and what we're trying to do is to improve our capacity and capability to retain our earnings within the system. We have got approval from the regulatory authorities in Nigeria, and we are awaiting approval from regulatory authorities in the country where we are acquiring the bank. But everything is looking well. Unfortunately, we do have some confidentiality agreements, and we may not be able to give all the details at this point until we get all the necessary approvals and we announce it to the public. There's nothing to worry about. It's just part of our strategy to ensure that we reach and follow our customers anywhere they go.
In your Q3 investor conference call, Diamond Bank announced that it was raising Tier 2 capital to shore up its capital adequacy ratio going into the year 2013. Can you update us on the progress to date in the raising of this capital and how you'll be allocating the additional capital?
We've recorded quite some success in that area. We are almost done with $200 million out of the required $500 million for this period. We got $70 million convertible Tier 2 capital from the International Finance Corporation, and we got another $100 million from another development bank, and additional $30 million we should be getting before the end of this month. So everything is signed, sealed, and just about to be delivered. So I can safely say that we have $200 million in the kitty. And with the $200 million, we are fine. We can continue running our business. Today, we have capital adequacy ratios well in excess of 16% and approaching 17%. So we are okay, but then we're also planning for the growth that our transformation system engenders. And that's why we are still looking for additional capital, but we have time. We are discussing the additional $300 million already. We have appointed parties, and we hope that before the end of the first quarter 2013 that we should have that in. But things are looking good. And in terms of where we intend to deploy additional capital, first of all, you need to ensure that you have capital adequacy ratios. You need to ensure that as you grow, that you have enough capital, and growth does not necessarily end with your footprints in terms of branch network. But as you lend money, as you do business, you need to have robust capital so that you remain very efficient. So that's why we are looking for money, but we are not in any difficulty at all.
Are you also planning to raise equity capital in 2013 or 2014?
I'm not sure of 2013, but beyond 2013, we'll be looking at raising Tier 1 capital. But that's not in the immediate radar. We'll be looking at, quite frankly, maybe from 2015, when the market has also recovered and things will become normal. I'm sure you are also aware that the stock market in the last couple of years has been at the bearish end, just making an attempt to recover. So this may not be an auspicious time to raise Tier 1 capital.